What I want to do is take you through the process, start to finish, so you can create some crystal clear understanding of all the steps involved and what is involved in passively investing in your first syndication. So now, while timelines vary quite a bit, the overall steps in investing in real estate are pretty much the same. So let's dive right in. Number one, decide whether or not to invest in real estate. So welcome back to the Free from Wall Street podcast. We talk about so many things on this show, but today we want to talk about the 7 steps to investing in your first real estate syndication. As you know, we're real estate investors. We talk about things from mindset all the way to how to quit your job, all the way to roller coaster rides of stock markets, economics, what the presidential election will bring to real estate investors. But I want to break it down today for you so that you know exactly what to do before you decide to invest in your own real estate syndication. So for most people, buying a house is pretty familiar. When you decide to buy a house, you're thinking about the neighborhoods and the features, the must-haves versus the nice-to-have columns, right? You're talking to a lender, how big of a house can you afford? What are they going to give you? And by extension, traditional types of real estate investing that involve buying and selling a house and making a profit are pretty easy to grasp, which is why we like buying and selling real estate. I mean, we started, as you know, as active investors, as fix and flippers and wholesalers, and we'd buy a house, we'd renovate it, we'd sell it for a profit, and then we'd go again and do that. And then, you know people that own rental properties, whether it's a single family house or a 2-family house, they go, they buy it, maybe they have some renovations to do with it, and then they start getting monthly checks. So I think the residential real estate market, like we just talked about, where single family houses, it's pretty, it's fairly easy to grasp. I think people understand it for the most part. Where it gets a little fuzzy is maybe these syndications that we talk about, where you're talking about buying 150 unit apartment complexes and you're investing passively alongside of a bunch of other people. Where other investors are helping to purchase a large asset like an apartment building or one of these self-storage facilities that we've built. I mean, some of these deals that we have 50, 60 people into them. So, it starts to get a little less clear for people. So what I want to do is take you through the process, start to finish, so you can create some crystal clear understanding of all the steps involved and what is involved in passively investing in your first syndication. So now, while timelines vary quite a bit, the overall steps in investing in real estate are pretty much the same. So let's dive right in. Number one, decide whether or not to invest in real estate. I think this is one that's pretty easily overlooked. People are like, yeah, I think that would be a good idea, but do you actually like to do it? Would that be something that's exciting to you? I'd say 99% of our investors like to invest in real estate the same reason that we like to invest in real estate, which is I like to touch it, I like to feel it, I like to drive by it, I like to see the asset, right? It's very different than, stocks and bonds investing or mutual fund investing or even cryptocurrency investing. I mean, real estate is one of the few things that's just a hard asset. You can drive by it, it's there all the time, So anyway, that's why we like it. But so step number one, you have to decide whether or not you want to invest in real estate. Number two, you got to determine your investment goals. We've talked about this on a couple of these podcasts, finding your why. Why are you doing this? What is your investing goal? Is it to get to financial freedom and figuring out your financial freedom number? Are you looking to create massive passive income? Are you looking to give away half of your income from your investments? I mean, there's a ton of reasons that people invest. What are yours? You need to determine what they are and figure them out. Write them down so that you can follow a plan to get there. Find an investment opportunity that fits. Now, this could be any number of things, right? What does your risk profile look like? Where do you like to invest? Is it geographically? Maybe you're geographically agnostic, which I am. I don't really care where it is as long as the population is growing, the job market is growing, and the cash flow is there, right? We're what they call geographically agnostic. That being said, we're not investing in California, New York, and New Jersey because they are massively exited states. So the top 3 states for people moving out isn't where we look. We look for the top 3 states where people are moving in. Anyway, you have to do some research and you got to figure out what investment opportunity fits for you, timeline, amount, all of those things. Fourth thing, reserve your spot in a deal, right? Raise your hand. Say, hey, I would like to get involved in this deal. What do I do? Review the private placement memorandum is number 5. Now, the PPM, as you'll hear some of us talk about, we like our acronyms. The PPM, private placement memorandum, is basically the legal documentation giving you the opportunity to jump into the deal. So you're subscribing to the deal, you're answering questionnaires, and it breaks down the risk of the deal. So similar to like mutual funds or any type of different investment, the SEC requires the PPM to lay out what the plan is for the property, what the plan is for the investment, and that there's some risk that gets carried with it. Number 6, send in your funds. Can't invest unless you send the troops on the field. So get those funds wired in for the closing date. And then finally, you get to number 7, celebrate. We tend to think about investing as, something that kind of we have to do for long term. I celebrate every time we close a deal. Every time that we are getting involved in another investment, I know that we're putting soldiers on the field, we're putting them to work, our money's going to go make us more money, and that means that I get to work less hours over time, right? We're building that passive income until finally we get to replace our income altogether. So don't forget to celebrate. It's a fun time. You can see us on social media all the time. Hey, we closed on this deal, or we just got under contract on this deal. You got to celebrate. You got to celebrate the wins, because this business, unlike other businesses, you're not doing 300 deals a year, right? Maybe we're going to do 4, 5, 6 deals in an entire year. So we like to celebrate the victories. So when you're deciding to invest, right? So let's go back to step number 1. Let's break this down a little bit more in detail, right? We're not going to spend a ton of time on it, but I think it's important to go through whether or not you're deciding. So decide to invest in real estate. I mean, this is the most important step of all. If you don't want to invest in real estate, then we can stop the conversation. Go invest in a tree grove, coffee plantation, stocks, bonds, whatever you want to do, right? But find something that you like to invest in, because that's what's going to keep your interest level. That's what's going to keep you reading about it, learning about it, and just getting more involved. So nobody's going to make this decision for you. You have to make this decision. Travis and I decided to start this business and start real estate investing because we were watching other people do it and have some success. And they started to live the lifestyles that we wanted to lead. So we decided to quit our 9-to-5 jobs and start a real estate investment company. And if you know anything about our journey, we went from wholesaling, went to flipping, and now we're into large commercial deals. Over the years, we've spent hundreds of hours flipping hundreds of properties throughout New Jersey. I mean, we've flipped for over a decade and then realized that, hey, we really have to create some passive income with this active income strategy, or we're going to have to work forever. I recognize that real estate investing is going to be the path for us to provide generational wealth for me and my family, but only if we could figure out a way to create passive income long term for myself and then for my kids and so on. Travis had similar plans. We wanted to build passive income so that we could quit jobs, so that we could so anyway, flipping for 10 years, decided to move on into passive income properties where you're not taxed as heavily, where there's a lot of tax advantages. Started listening to some real estate podcasts. If you're listening to this one, this might be the one that pushes you over the edge, right? We listen to everybody who is doing these deals. How do I get involved in these deals? And then we started talking to people that were involved in them and finding out that, buying an 8-unit property, which is what we originally wanted to do, by the way, was not the way that we would really create the goals, right? So again, it starts with the goals. Do we want to invest in real estate? Yes. Why? Here's our goal. This is how I think we can accomplish it, finding other people that are accomplishing it. So we just started digging in, reading books, listening to podcasts. How do we get in from our active income to a passive income position? And then we started listening about real estate syndication, started to really educate ourselves on that. As you know, we own about $100 million worth of commercial real estate across the country. And, we're just getting started as far as we're concerned. So, Every person, every family is different. Everybody has different goals. You got to do your own research. You have to think, reflect, decide whether or not this is going to be right for you, and then how to implement that plan, and then go do it. Find people that are doing it. Reach out to us if you have questions about how to do this stuff. That's what we did. We listened to people on podcasts and said, how do I contact this person? Not that hard to find us, right? integrityhg.com. Hit contact. You get in touch with us. We'll chat with you about what your goals are, how we can help you achieve them. If you want to go out and do this on your own, how we can help you achieve those goals too. So that leads to step number 2, determine the investing goals. If you're not afraid to roll up your sleeves and put in some sweat equity, you want to choose your own tenants and do cabinets and flooring, and you want to be a rental portfolio manager, then go ahead and do that. I didn't want to do that. So that's why the single family, the duplex, the quads, that wasn't for us. We decided pretty early on, after listening to a couple of our mentors talk to us about how their smallest properties were their most headache-ridden, and then understanding what economies of scale looked like in terms of, can we hire a third-party manager? Can we hire an asset manager? How much time do we have to spend on the deal, and do the economies of scale absorb other employees that can do those jobs? I didn't want to swap out toilets, right? I mean, we did it for years when we were flipping houses. I wanted to be a set it and forget it type of investor. So where we invest passively, that's what we do. Where we invest actively, that's still our job. But, depending on what your goals are, you have to depend on it depends on what investment is a good fit. So you can invest your money alongside other investors. You can use an asset manager. You can manage stuff yourself. There's just a million ways to do it. So figure out what your investment goals are, and then what opportunity aligns with that, which is step number 3, right? Finding the opportunity that fits. So you have to find the people that you know, like, and trust. That's number 1, right? If you're going to be a passive investor and you want to set it and forget it, then there's a ton of projects out there. And they can be all kinds of things. We've built self-storage facilities from the ground up where it takes 2 years to get cash flow, but we liked it for a number of reasons. We do value-add multifamily. We like those for a number of reasons. Turnkey syndication. So there's a lot of options and opportunities out there. You just have to find the operator, right? Who is doing these types of deals? Do I know, like, and trust them? Does their ethos match ours? Like you guys know that we do the Invest with Purpose, where we carve out equity for a nonprofit in every deal. We have more and more people coming to us that are impact investors. They want to be a significant investor. They want to move from success to significant. They want their money to make them money, but they also know that they can make an impact on the world, and that's a great fit. The people that reach out to us that want to do that, well, that's part of our business plan, business model, so that works. So find the people you know, like, and trust, and then start talking to them about the types of deals that they're doing and see if that's a good fit for you. And then when the next deal pops along, you can say, hey, I want to see the executive summary. I want to see the investment model, right? I want to see the investment summary, the investor webinar. I want to learn it about this deal that you're doing, and then dive into it. Ask a bunch of questions. First, when I'm looking at these deals, and we look from the active side and the passive side. First thing, right, is what we just talked about, is who's the team? What's the track record? What are they doing? How can they, is the team going to make the project, or is the project going to make the team? And often, if the team's going to make the project, I'm in. If the project's going to make the team, I'm worried, because things go wrong. And if the team isn't capable of handling ups and downs, then it can create some issues in the deal. As in any aspect of life, these real estate syndications are very prone to this day-to-day life happens. So problems are going to happen. How is the team going to respond? In what way have they responded in the past? And then I kind of vet it that way, right? Because I know things are going to go wrong. I want to know how they react. Do they panic? Is the sky falling? Do they pivot? Do they cover and move with each other? How do they deal with the problems is what I always like to look at. And then I'm looking at the geography, right? I want to know what the market is like. Why do you like this job market? And then I'll start to do some of my own research. Job growth, population growth. What are the other trends? Is it economically diverse, or is it stagnated by just one industry, that if that industry goes away, we're in big trouble? What's the minimum investment amount? that I can put in? How long is my investment going to be in there? What are the projected returns? How's everybody else getting paid? I like to know that too. What's the exit strategy? How long should I expect for an exit strategy? Is there more than one potential exit strategy, which is a good thing in my opinion. And the reason I like multiple exit strategies, if plan A doesn't work out, what are you going to do? So basically we look for any reason not to invest in the deal, right? You guys know that we jokingly put Travis on the website as the deal killer, and he caught a lot of backlash for that from like brokers and stuff, thinking he's always going to kill the deal. But every investor should look for that. I think every investor needs to look at a deal as to why shouldn't I invest, right? And if after you check all those boxes and you still want to invest, then that's probably a good deal to consider. Anyway, that's what we do. Everybody's different. Again, review more investments. You'll get comfortable with what it is that you're talking about, and then decide which one you're going to pull the trigger on. And then reserving the spot, right? So our syndications are first come, first serve. Some take some time, some take no time. I mean, we've done multi-million-dollar investments that have filled up in hours, right? Especially in these hot markets with strong sponsors. So you want to do your research ahead of time so that when a deal comes up, you're ready. Like, hey, I have this much money. This is what the deal is that I want to do. And then when the opportunity jumps in or opens up, you can jump in. What we do is also soft reserve amounts. So after you get to know us a little bit, and other sponsors do this too, they'll do what they call a soft reserve, basically holding a spot for you in the next deal as we're creating the legal paperwork and all that stuff. So just keep an eye out for that stuff. And if you find a deal that makes sense, put a soft reserve in. It's not a hard commitment. Sometimes people have life issues that come up where their soft reserve doesn't turn into the full amount invested, or maybe they can't invest in that project at all anymore because of some things that go on. Life happens. We understand that. But if you're ready to move, then just let us know, let the other sponsor know, whoever you're working with. The opposite of that is if you don't do a soft reserve, or you don't have a soft commitment, you don't have these relationships with the people that are operating the deal. If the deal comes and goes and you missed it, then have to wait on to the next one, right? So review the PPM is next that we talked about. Again, legal document, lengthy. You might want to have an attorney take a look at it because it is legal paperwork. It depends on your comfort level with reviewing these types of documents. You got to read through it. It's really so you understand the opportunity, understand the risks, and then understand the operating agreement, which is how everybody gets paid, how the sponsors have to operate the deal. And then once you get that signed, then you send in your funds. You typically will wire it or send us a check. Typically wire. It's 2021 now. So before wiring your funds, we always say this. Make sure you call the person that sent you the wiring instructions. A lot of wire fraud going on. Make sure that they verify the emailed or electronic wiring instructions over the phone with you. And then make sure you let us know that the money's on their way so we can take a peek and let you know that we got it, right? And then last step, celebrate. Crack open a glass of champagne. Go have, a movie night with your spouse. Whatever it is, the next piece of information you're going to get is that the property is closed and that you are now a part owner of a 150-unit apartment complex or a 390, whatever it is that you just invested in. And then you'll get your, we do monthly updates through the portal, and then detailed quarterly financials, and then cash flow distributions, which is why we're invested, right? And then your annual K1s, which often in the first couple of years will show some nice depreciation for your tax returns. And that's it. So those are the 7 steps to investing in your first real estate syndication. If you want to know more, make sure you go to our website, integrityhg.com, and sign up for our investor club. That way you can see some of the deals. We can get to know you a little bit. You can ask us some questions. We can ask you some questions and see if it's a good fit in the future for working together. If you just have questions in general about some of this stuff and you want to know how it works in a little bit more detail, again, always reach out to us, integrityhg.com/contact. Thank you so much for listening to the Free from Wall Street podcast. 7 things to do before investing in your first real estate syndication. Now, go get started because there's going to be 2021 has lots of opportunity. We are underwriting and it looks like we're going under contract on a couple of deals here in Q1, which we're really excited about. So we expect to have the biggest year we've ever had. We'd love you to join us in that. We hope that you have the best year that you've ever had. And hopefully we can do it together if you so choose to do so. So thanks again. Listening to the Free from Wall Street podcast. We will see you next time.